right, you're still watching Global Mantra right here on ET now, and I'm still in conversation with Mark Artherton, who's the head of emerging markets. It's the first time that he's talking to an India business channel. So, just let's go across to him and get a quick perspective on what he's thinking about India and, of course, the position that India has in the entire emerging market pack. Mark, incidentally, manages about $5 billion directly in emerging market equities. Mark, you have three prominent funds there. You have an Asia-Pacific fund, you have an emerging market equity fund, and you have an emerging market small cap fund, something that you alluded to earlier on. In the Asia-Pacific and the EM equity fund, I do not see India in the top 5. Why?
Yes, I mean, as I mentioned earlier, we've been against, specifically in the large cap space, we've been against the sort of the more domestically oriented markets. And so India falls into that with the large weighting to financials specifically within that. So we've in both the Asia Pacific Fund and the large cap fund we've been underweight, and India has actually underperformed over that period. So we felt justified in that decision to have that. There were a number of reasons for us to make that decision. When we were looking at India, say 5 or 6 months ago, the valuation seemed pretty high given the growth prospects. And then you had a number of significant issues that happened, but also this big inflation story around emerging markets, where India is one of the key concerns we have is the inflationary outlook.
But we've fallen 10%, Mark, from the start of the year, so there's been a substantial correction in valuations as well. I mean, we're now trading 14.5 times FY12 earnings. Does that build a case where you perhaps look at an opportunity in India to scale up?
Yeah, very clearly. I think if I put India within those other domestic economies, say for example Indonesia as well, that have fallen a long way. Turkey has fallen a long way as well. They're in the same position. They're countries that all import oil, and countries with inflation issues or potential inflation issues. And then these other issues arise, and equity markets like to pick on those when they arise. So now with this reduction and looking at the valuations and looking where India usually trades in a valuation range, India is starting to come up as on the attractive side for it. Now, does that mean that we're going to rush to overweight? We don't think so. We think we've got enough time here, especially because I think that the inflationary roll-off is just a little bit further away than is currently forecast by economists. However, it has given us a nice opportunity to look at some high-quality blue-chip names within India.
Coming down to sector-specific stories in India, you like IT across the board. You're very big on financials in the EM pack, and you've holdings in stocks, blue-chip companies like Infosys and ICICI Bank. What grabs my attention is that you're underweight on the largest company in India, which is Reliance Industries. They've just had this deal with BP, with this huge chunk of money, $7 billion coming in terms of long-term capital into the country. They have the global presence, they have the scale, and they are grabbing the headlines. Why are you underweight on Reliance?
I think it's a perspective of us being global investors. So we're looking globally. So Reliance sits within that space of energy-related companies. And when we've looked internationally at where we are, and we try to have relatively concentrated portfolios in terms of our positioning, and where we've looked at the relative prospects for energy companies, we actually alighted on the fact that the Russian oil companies, for example, look much more well exposed to the top-down factors that were going on. And I think that Reliance itself has never come into any of the key ways that we tend to look at markets and what's going to move markets. Now, I agree with you that the deal is very good, and so I have an energy analyst who looks very closely at it, but as I say, within that sort of subset, we found more attraction in, for example, the recovery in Petrobras, which had derated quite sharply because of what was going on with their
investments. What's your key concern with Reliance? I mean, if you are evaluating opportunities in the energy space, and energy is not your favorite sector, I mean, your allocation to energy is limited, but what's your key concern on Reliance?
Well, I think on Reliance, and we do have a decent weight in energy, but I think on Reliance, it's always been more the relative valuations. So I've tried to step Reliance outside of the India story and put it in the context of the Russian oils, of Sasol in South Africa. And it's always been that relative valuation argument that's kept us away from that.
Okay. Even in the small cap space, one of the holdings that you have is a Polo Toss, which is an auto ancillary company, a derivative of the auto sector and the growth seen there, which is of course linked to how rates progress. Is that how you would play the small cap theme, where you find niche stories within India? What is your thinking there?
Yeah, very clearly. I mean, I think the small cap manager is looking for niches in two aspects. So he's looking at valuations very, very closely, and so they need to show attractive valuation. And secondarily, it's related to thematics. So if we look through time, the demand for autos in India is going to keep growing. So there are cyclical components to that very clearly, and if rates continue to go up, then that slows auto demand down. However, as a derivative exposure to that, a Polo Toss is a very good one. And as you get more and more stock of cars within India, then the replacement tyre service. So it's not just entirely related to new sales. And so we kind of like that kind of investment idea in the mid and small cap to lever off what's going on in the large cap space, but at better valuations with higher growth. And so those kind of ideas are what we've been looking for. And one of the things we like about the Indian market is the depth. There's lots of mid-cap and small-cap names that you can find.
So if you would play
ideas.
the India story, and if you were to look at scaling up in India, you would play it via the mid-cap and the small-cap space.
Yeah, I think so. I think that building out your portfolio, I think you need, from a risk perspective and also from the general sell-off, I say impacted the large caps. There is space for large cap names within an Indian portfolio. But I think if you want to have that extra growth, that extra impetus, where's India going to be in 5-10 years' time, then the mid-cap space is very definitely an area you should focus on.
Thinking behind Enforcers and ICICI Bank?
On the emphasis side, it was always that exposure to the US, the US economy, and its US recovered, and also somewhat a defensive positioning within India, as what was going on with the scandals and the increase in inflation. We remain long-term believers in the outsourcing story. From any number of economies into India, and so we think emphasis remains a key position within portfolios for emerging market investors. On ICICI Bank, it was more of a consolidation of our banking positions into the blue chip name, basically. We wanted to keep some exposure to the banking sector. We'd seen the issues in the microfinancing that we didn't like, and so we collapsed our holdings down into one blue chip name. So
some of the mid-tier, small-tier banking stocks will also be on your radar?
Yes, very definitely. Not at the moment with that issue with the microfinancing and this flight to quality, but they always remain there, and we think it's one of the more attractive areas is Indian finance in the long term.
Microfinance obviously is not on your radar.
No, it's a shame because as a theme, it was always a good theme, microfinance. But you can see why it's been tightened up on, and you can see the issues that are happening. But what we'd like to see is more and more of the big banks providing effective finance to that part of the population. I think that would be a very positive.
What about the realistic return expectation from India?
I think it's always fairly straightforward to assume in emerging markets that you're going to get at least the earnings growth, and so a 16% return for earnings, for dollar earnings, it seems fairly reasonable.
All right, Mark, we leave it at that. Thanks very much for taking out the time today.
No problem.
Well, with that, we come to the end of this edition of Global Mantra. Catch you again with another special guest right here from London.
I think Satyam is a great case study of how we go about investing. After the scandal and it was disclosed